Hey, what's going on, everybody? So you guys already know my name is Yusuf Scott, and they also consider me the Forest Goat. I want to welcome you guys here to the So Darn Easy Forex movement. This is where I teach people just like yourself from all across the world how to look at the market in a new perspective and trade the market for profit. All right. Now, listen, as I always tell you guys, definitely you guys want and need to get connected with us on social media. Of course, that's Facebook, that's Instagram. You also want to make sure that you're connected with us on YouTube. Of course, on this YouTube channel right here, this is where 27,000 plus people from all across the world, if not more, come here to look at videos on various topics. And I want to thank you guys for that. And of course, for those of you who don't already know, we're also on Vimeo, so get connected with us there as well. Now listen, this video today is going to be my analysis on the Euro USD pair. Okay, now I want to share something with you guys about this pair right here. And actually, before we get started with that, I decided to sort of break up the monotony because the videos that I was making earlier, the ones where I'm giving you guys my Forex journey, those videos were taking a bit of my time, and I had to make sure that I spent time with family, and I was in the process of cutting up some, I was unbundling some wood for the fireplace, and I wound up cutting my finger. So you guys can notice I have a bandage on, cut my finger pretty deep. So I'm fine. It wasn't nothing like I need stitches or anything, but I was undoing a little bundle for our wood burning fireplace, and there are like staples with little straps on some of the pieces of wood, and I was trying to cut it off, and it slipped and cut my finger. So I have a little bandage on here. I don't know how I'm gonna. I guess I can use it while I'm working out and all that stuff, but nonetheless, I'm fine. So I decided to sort of do something a little different, sort of break up the monotony, and give you guys my analysis on the Euro USD. Hopefully, you guys can take some ideas from this. And there's gonna be another video that I'm gonna actually make for. I'm gonna make this video for the entire world. Okay, I'm gonna make this video for the entire world. Something that I ran across earlier that I thought was quite interesting. All right, but nonetheless, as you guys know, this video is gonna be about my Euro USD analysis. Okay, it's gonna be my analysis on the Euro USD pair, and I want you guys to pay attention. All right, so just to let you guys know, I'm what I consider to be a logical trader. Okay, I used to trade fundamentals. I used to be a fundamental trader. If I had to decide between a fundamental or a technical trader, it would be more so a technical, but I like to consider myself more of a logical trader. Okay, so the reason why I'm a logical trader is because the way that I process the market, the way that I look at the market, and this is what I get my students to see the market as. And I'm telling you, when we have training and when we go over the market like we did on, I think it was this past Thursday during our next level training, I get a lot. It'd be very exciting. My students are very excited when I really touch down on some things and really get into it. It can be quite explosive. All right. Now, going forward, let's take a look at this Euro USD pair. Okay, we see what the market is. Now, something that I want you guys to know is you have to know where the market came from in order to know where it's going. Okay, keep that in mind. Matter of fact, I'm going to write that down. Let's write this down. We're gonna put it in all bold caps. I'm gonna do a couple of these. All right, very simple. And I'm going to leave it right here. I'm going to give it enough room for us to all right. Very simple. You have to know where the market came from in order to know where the market is going. All right, very simple. And that's going to be up there permanently. So, to know where the market came from, you have to know, in order for you to know where the market is going, you have to know where the market came from. Whatever. Let's look at where the market is. Let's look at where the market came from. We're going to break this down. So, based on as far back as Trader's Way could chart the Euro USD, the way that I look at this market is we have a couple things going on. I'm going to use a series of you guys just bear with me. Just bear with me. All right, let's just focus on this area. This area right here, the market was trending down, okay? Then the market started to go back up. Of course, if we look at this, some might say, well, you know, you could consider this like a range, you know, the beginning of a range. You know, maybe from here, here, and then here. Maybe the beginning of a range it looked like. But as you move forward, you know, the market didn't do that. It kept going. So the market was going down over time, then it was going up over time, then it was going down, it was going all the way down. Okay? And you're talking from February, let's say the end of 1994, early 1995, all the way down to I guess for the next 5-6 years, maybe, you know, maybe more, the market was going down. And then, so this right here was a major move down. This is a long trend to the downside. And then after that, let's say 2001, 2002, the market started pulling up all the way up until 2008. Okay? Very simple. The market was going down, then it was going up for a short period of time, down, then up. Then the market started going down for a long period of time, like 6 or 7 years. And then 2001 or so to about 2008, the market's going all the way up. And as you see, all the way up. Okay? Do that again. The market's going down. The market was going up. Not very long, going down, going up a couple years a piece, and then it started going all the way down, and then it started going all the way back up. Okay? What we're going to do is we're going to do this. We want to make sure we know where we are. We'll make this thick. We're going to look at the monthly so we can realize where we are on the monthly. So on a monthly, this is where we are. Okay? So this is where when the market went back up from 2001 all the way to 2008, this is where we were. Okay? So as you see, this is what the market was doing. See that? Overall, you can see the same thing on the monthly. Let's go back. I just want to break it down so we can go back to the daily. Let's go back to the daily. Let's find our area, 2008. And that's that. Okay. Now let's just take a look at this area in 2008. So let's take a look at this area. See, the market came here and it didn't go down immediately. The market came there after having a long run. The market came to that level just like it did here. It came here and it started sort of ranging. You know, there was a tight range. Okay, see that? And then the market did the same thing up here. See that? And then the market dropped. All right, we're going to get rid of these because this right here was just a sign of, actually, let me do these individually. I want to delete any of the other. Oops. All right, so this little range here and this little range here, this was a sign. Since 2000, since 2001 or so, the market continued to make higher highs. Now the market did that up in this area. it ranged and then it pushed up, ranged again. But let's take a look at this. Let's put our Butcher face back on. Now we know where we are. Let's go to the monthly. See, we don't have nothing up there. This is the first time the market came up there, but the market was running up there quite long. It was running in that direction for a long time. So, because of that, logically, the way that I process the market is, I know that eventually it's going to go back down. Because like in any street fight, in any Mayweather boxing match, Mayweather, as well as his opponent, they'll both have their turn against the ropes. They'll both have their turn where they're blocking. Okay? Ducking, dodging, weaving, blocking. Because of exhaustion. But the tables will turn at some point. Now, because I know some people, because you're not in my training, you may ask, well, what made this market a better market for it to go down from? That's not a question I can ask. I don't know. I'm no psychic. You see, we as traders, we as Forex traders, we have to allow the market to do what it's supposed to do, and then we react. Okay? That's what we have to do. We have to learn to allow the market to react, or allow the market to happen, and then we react, instead of the other way around. You know, it's not what happens in the market that causes one to be successful or one to lose. It's what you do after the market happens. It's what you do as a result of that. That's what causes people to lose. So, if I saw this market here, ranging, went up, came down, went up to the same level, came down to pretty much the same level, went up to the same level, went back down nearly to the same level, but it went up and kept going. That idea is done. Now we're back into continuation. Okay, real simple. Once the market reached the next area, it did the same thing. Went up, came down to some area, went back up, came down to the same area, went back up, then it pushed back down, meaning the market went up. Let's remove these because there were a lot of different areas where the market kind of, see, the market came up, came down, came up, came down, came up, came down. All right, this is where we had our, okay, I'm gonna make this thinner. Came down, up, down, you can see that? And then at this point, the market did what? Instead of going back up, it went back down. Okay? So the market kept going down. It didn't stop. It did not stop. Now we're not going to get hung up here because this is not what you guys come for. You guys didn't, you can hopefully comprehend this. Because if you can't comprehend this, I don't know what to say to you. But after the market, 2001, the market came up. 2008, it started coming down. Okay, so the market came down. The market broke out of this little trend going up. It broke out of there. It kept going. Pulled back to it. Broke out of there. I mean, pulled away from it. Now the market is sort of going up. Hit off the same area, the same trend, pushed down. Let's move over. So now when we look at this area, so this is what we're looking at. When we look at this area, we now see that the market is in some type of range. Still going up, coming down, going up, nearly to the same area, coming down, went up. Well, guess what? The market failed to go just as high anymore. It failed to go that high. Logically, it's probably not going up. That's probably why. So the market kept going down. You guys have to remember, I'm a long-term trader. Okay? I provide, my style of trading is long-term. I can still scalp the mess out of a market. But being busy, long-term trading, that's where it's at. So the market, as I would have had expected, it failed to come back to the same area. It kept going down to an area where the market had found comfort, if you will. But it kept going. Now this was like that 2014, I rode that market down when the Euro USD was coming down and oil was there. They were both coming down, and around the same time they started to range. You guys see right here. So now let's look at this. We already drew these on, and we know. See, this market was sort of ranging. I mean, sort of trending all up in there, and then the market, once it broke this trend level, the market started to do a range type thing. Okay, see, I could draw something on something like this. Started to range. So since then, the market gave us a sign that it probably would not go up because it only came here. Yes, it did come back down to this point, but my long-term analysis was it's not gonna go back up at this point right here. Okay? The bears kept the bulls captive. They didn't allow them to go up to this point. Came down to here and kept going. When the market, and let's analyze this, the market came down to here. Then we fell into a range. And this is when the magic happens. This is when I start telling people, listen, this market is going up. And I had a lot of people who went against that, and they said, nah, this market is not. It's going down. And whatever, it happens. The market came down. The market fell into a range, a tight range. You guys see the range that I'm speaking on. I'm gonna get rid of this. Is here. Now you guys see how we came all the way from back here, broke everything down, you know, and now we're here. We're in current market conditions right now. The market was ranging a couple years ago. Okay, up, down, up, down, up, broke it. Since then, it's been hitting off the same area. Okay, now this was, when I see the market moving in one direction for a long time, that's when I look at that area or that motion in the currency. The current is going down. So the momentum, the trend is going down. That's a major trend. Because these swings in here were short, that, you know, it's just a range. It's not a long run down or a long period of the market going up like this. Okay, this area here was just going up and down from a tight area, and it can be easily seen from afar. You know, you don't need to do anything special to see that. It's ranging clearly. So from that point, this area right here, I told everyone around April of last year, when every single market, every Euro market gapped up during the French presidential election, I told everyone that market will be going up for a while. My bias is that that market will be going up. And what did the market do? While some said no, that market is going down, I knew that 3 to 6 months out, maybe more, that market would go up. How far up? I don't know. I'm no psychic, but I knew one thing. I knew it was going up. While some argue that, you know, publicly, they quickly silence themselves when they realize, oh, this guy, he knows what he's talking about. Just to let you guys know, I don't always do this analyzing of the charts. I don't analyze the charts publicly. This is for my students. All right, just to let you guys know, just in case you guys were wondering, you know, this guy, he does a lot of talking in his videos. It's crazy. He does a lot of talking in his videos. He don't show us much of charts. I show my students my charts. All right. So going back to what I was saying, this market in a range, this market during this area right here, let's make this yellow, and then do the same for this one. All right, and now let's lock those up. Let's zoom in, and let's look at the French presidential election. So this was the French presidential election. Another good area that the market gapped up from, and it kept going. This is what caused me to know these markets are going up. Guarantee you these markets are going up. I don't care what no one says. My analysis based on what it is I know about these markets are going up. And it's something that I've been telling my students forever. All right. See, my analysis, my bias on any market is always my bias until proven wrong, until there's a change that tells me otherwise. All right. So guess what? The market in April last year went all the way up to here, okay, until this area. And you're talking almost a year, the market kept going up. Now, along the way, notice I kept this area on. Along the way, this same area here, that after the market dropped down, this same area that was, that was committed, that the market committed to along this range, was the area that the market continued to respect. Okay? Now let's continue breaking this down. So here we go. We have, and actually let's get rid of these. We're going to get rid of these. We're going to use this. This is what we're going to use. Be a little different. We're going to use this. Okay? So this market was ranging. All right? Well, it broke out of the range. It broke out of it. There are a lot of people who trade breakouts. There you go. Did you trade that one? Or were you one of those who continue to doubt my analysis? Whether I put it out publicly or if it was just for my students. Did you doubt it or did you trade it? Regardless of the fact, the market continued to go up for a year's time. Okay? Now, at this point, you guys can see what's going on. Market went up, come down to this area, the same area. And some people wonder, what is the market doing now? What is it doing? Sometimes you have to just be patient to find out. You have to be patient. One thing for certain is my bias hasn't changed. Okay? I remember not long ago I had someone ask me by way of email, man, the market, it keeps going down. Are you still expecting the market to go up? I mean, my thing is, what happened for me to change my bias? There are certain things that I look for in these markets that will indicate to me if the market is done or not. When I look at this, yes, this market fell down into a familiar territory. But it doesn't mean that, because just like I tell people, a pullback, just like a slingshot, you pull back to launch farther, higher, in that direction. So a pullback could be so the market could launch higher. Okay? It could. See, we don't know. And this is why people, they lose because they don't really know how to read the market. I make sure that when I'm reading the market, I'm looking at the finer details, because you guys know, those folks who push the market around, you guys call them the market makers, the institutions, whatever. They know what they're doing. I'll show you guys some proof of that in another video. Things that have come to me over time of analyzing these charts, taking a step back and looking at, what in the world is going on? Why did they do that? See, sometimes we have to just let them make their move and then sit back and analyze what happened. Okay? So the reason why I decided to analyze this one is because this pair right here, whether or not you guys know it, for those of you who are new, this pair right here has one of the smallest pip spreads. Meaning, if you accidentally open up a trade, you might just fall into profit. Literally. Sometimes it's just under 1 pip, usually hovering around 1 pip. That's nothing. When you're used to trading on pairs with spreads higher than 10 pips, that's a good day. Now, it may not move, it may not have the burst of volatility as some of the highly volatile pairs, obviously, but because of the spread and all that stuff, it's quite liquid. That can be a good and bad thing. It can be easily pushed around. That's, in some reasons I don't care for it, but it is what it is. The way that I analyze this market is how I would analyze any other pair. All right. I think you guys know by now that having a student base, I cannot divulge everything. Okay, you guys have to know that it's I operate a service, I operate a business, so I cannot divulge everything that I would, of course, to my students. So this should be a fantastic baseline for you guys to follow. I'm going to commit to doing this more often, because I think that there are a lot of people who for whatever reason, there are a lot of people who still are in disbelief that someone can be so accurate and have the have the level of success that he or she does. Unfortunately, there are people who still doubt the path and the journey. So I'm going to do this more often. I'm not going to do it all the time, but I'm going to commit to doing it certain pairs. That way you guys can get an idea as to what it is, what it is you should be looking at to help you determine what to do in a market. All right. Of course, knowing the perfect entry strategy and knowing the perfect entry strategy will tell you when and where you should be getting into the market at. The stay in your trade strategy will let you know when it's okay to stay in that trade. Okay. So these are all things that ties into, I tie this into my analysis for my students, of course. But you have to pay attention. Do not think for a second that they don't know why they sent the market down there, or why they pushed the market up there. They know what they're doing. Okay. So keep that in mind, ladies and gentlemen. Hopefully this analysis has helped you guys out. Okay, you guys you should be able to get a baseline or get an idea. You could use this as a baseline to help you determine where the market may go. I'm still watching a few things with this. You know, my bias is still long. Just because the market pulled back, it doesn't mean that that move is over. It doesn't mean that the trend is over. It doesn't mean that long term, 6 months from now, a year from now, the market won't continue in that direction. Sometimes the market will pull back, as I said, to regroup. It's almost like you watching, you know, the race car track, and you notice sometimes the guys that pull over and they'll, you know, change tires and all that stuff, whatever, gas or whatever, and it's like their way of regrouping. You know, building up that steam, building up that energy, so that they can have that burst and get out there and go for it. And that's what the market does. So, like I always tell you guys, it's about how you look at the market. It's how you perceive the market. You know, a lot of people they just they don't see the market right. They look at the market in a very small window, and they zoom all the way in, and everything looks so distorted, you know, pixelated, if you will, and you can't see anything, you know. So anyway, listen, you guys, have a fantastic day. Of course, you guys already know Yusuf Scott, the Forex GOAT. Remember, if you guys are not yet subscribed to this YouTube channel, get subscribed, and we'll see you guys in the next video. All right, peace.